Right, let's welcome in a special guest. We've got Seth Freeman, CEO and Chief Investment Officer at EM Capital Management, who's joining us all the way from San Francisco. Thank you, Mr. Freeman, for speaking with us at NDTV Profit. So the US Fed has done what was expected, raise interest rate by 25 basis points. Do you think the chairman sounded dovish, though they have said that they're looking at 3 rate hikes in the next year as opposed to 2 that they had guided earlier? Do you think the outlook, the gradual increase, is as dovish as was expected?
Well, I would call it sort of measured, which has been pretty much her communication style, because while they wanted to increase it from an expected so-called 2 dots to 3 dots, she made it clear that the future is uncertain and leaving it open for adjustment. But she identified, pretty much the key data points that they're looking at, which is job growth and inflation, and as the 2 major indicators. And although she says there's room for fiscal policy, it's really too early to say what the impact of that might be.
President-elect Donald Trump has about to improve infrastructure in the US. Is that going to be inflationary in your mind, or is there a risk to inflation going higher from crude oil prices? Do you think this 3 dot could be even more than 3 dots? Should inflation move higher? Because the jobs market has been very steady and is likely to stay that way.
Yeah, I've been pretty consistently, frankly, cynical about the jobs number. The jobs number that's reported, there's several different categories of unemployment figures in our country, and this one does not reflect those who have stopped looking for jobs. They're not counted as unemployed anymore. The other is, it doesn't really in the headline number doesn't indicate the types of jobs that have been taken up lately. And the bulk of the new jobs that are created are relevant jobs and part-time jobs, and nothing like the jobs, in many cases, that existed before the recession. But I think what the Fed is going to be focusing on more is, as you mentioned, is inflation. And it's just getting close to the 2%. I think they're going to watch that very closely, because there is a danger of raising rates too early before we really reach what I might call stabilization.
What happens, say, if dollar index continues to go up, or it continues to see the strength that it has? Do you think it's very negative for emerging markets, or with the movement in dollar index that we have seen in the last few months or so, emerging markets fund managers were already aware that such problems could happen?
Yeah, it's negative. It's negative because, of course, money flows compete. But it's also negative because, in the case of U.S. investors, our NAV is announced in dollars, and so even if the Indian stock market is flat, but the rupee depreciates, our NAVs go down. So that is something, and it's still very expensive to hedge. So that really is an issue. However, I think the fact is that so much money now is invested based on index-based investing as opposed to stock picking. And, to the extent that investors are investing in a global fund, then the fact that more money comes in for the U.S. means some set percentage of money has to go to emerging markets in India as well. So that's going to provide a little bit of protection for emerging markets this time.
Since the US election, the market positioning has changed quite a bit. Broadly out of bonds and back into equities, especially into developed markets, emerging markets also seeing a share of it. Do you think that will continue, or again, the street would try to predict what the US Fed would do and then try to take a call?
No, I think that this 25 basis point move was already baked in, and investors have a pretty strong preview of what to expect for the next 12 months. So what's going to be more important, I think, will be policy, whether it's policy in India, for those of us who are focused on investing in India, and policy here in the U.S. But at the end of the day, for most investors, it's all about earnings. And the stock market is generally forward-looking. So U.S. prices that you're seeing now reflect some ebullience based on the kinds of programs that Trump is saying he wants to implement. But it's forward-looking. And in the same sense, the Indian market should be forward-looking. The Indian market has always been much more sentiment-driven. And, some shocks like abrupt demonetization or possibly GST taking longer to implement could have create more difficulties for the Indian market.
Right. Overall, more than, as you said, that, the Fed hike probably was baked into the system. Everybody knew that 25 is definitely given. So US trade policies, what happens there? What happens to, the fiscal stimulus or perceived fiscal stimulus? That's what will decide whether it's a risk on trade or a risk off trade?
It's interesting that you bring up trade policy, because I think in terms of trade policy, India is very well positioned. There's already a little bit of, you could say, I'll call it negativity towards our trade with China and price competition with China. And so I think that we might, as a matter of policy and the steering of corporate America and Indian corporate together. So I actually can envision the relationship of trade with India as growing over the next 4 years. So I think trade is good.
Mr. Freeman, how much do you think the global economy will grow in 2017? Does it look like the downside risks to global growth are diminishing? How much of a risk is the crude oil spike? And if there is stability in global growth, which are the economies that will benefit the most? Would you look in the emerging market space? Would you look at India and China?
Well, in terms of the first part of your question, I wish I knew. I wish I could tell you, because I'd be a savant. But in terms of where we're looking at global growth, we have some still very slow growth in Europe. We have Brexit that's still unresolved. We have these elections and possibly more referendums happening in Europe. That's makes investors nervous. And your point about rising oil prices can really dampen growth. It depends on how well the OPEC and non-OPEC producers really keep to their new treaties. And but generally, there hasn't been very good cohesion. So the constrained volumes that are supposed to raise prices may not really last very long. In terms of growth, in emerging markets, I think it's kind of interesting to me that a lot of investors are looking again back at Brazil, even though it's impeaching its leader. So my favorite has been India for 10 years. I think India has so far to go. We look at the market and see a lot of noise. It's hard to remember that in 2004, when I got involved with India, the Sensex was 8,000. And the Wall Street Journal said the market was overheated and needed a break. And so even with all these ups and downs and all the crises and GAR and everything else, look at the market today. And I see that same kind of trend continuing.
All right. So when it comes to inflows into countries like China and India, we've seen a little bit of pullout in India. Do you think these inflows could resume? What will be a trigger for inflows to pick up in a good fashion?
I would say continued clarity on policy would be the most important coming from the government. Investors are very concerned about uncertainty. We hear about GST getting approved by both houses and so forth, and then of course, like in every government, there's implementation problems. But ultimately, it's going to be earnings based, and the beneficiaries from foreign investors will be the large cap companies, mainly because they're the most liquid companies. One of the challenges is these ETFs and other index funds suck up a lot of liquidity from the market, and it makes trading the shares more difficult for other investors. So I think one of the constraints in the Indian market, as the global economy does improve, is basically liquidity. But I think that for small and mid-cap companies, it's going to be more challenging to attract foreign capital, just because I just believe there's going to be a greater focus from foreign investors on large caps.
Right. Just a quick word on, say if the pace of hike is what Fed has indicated yesterday, or probably slightly higher than what market is predicting. Do you think most of the emerging markets on an aggregate basis will be able to bear that shock?
Yeah, because I think so much of this has been anticipated that I don't see any kind of, I really would be surprised if there's a big knee jerk or a real shock to the system. I just think that there'll be some redemptions. There will probably be much slower growth of inflows going forward. And again, the rising interest rates strengthen the US dollar and weaken foreign currencies. And that just sort of adds a new parameter in terms of looking at where's the risks of investing in emerging markets. But again, long-term investors, I think, will stay focused on emerging markets because no matter what, that's where the real long-term growth is.
Right. Thank you so much, Mr. Freeman, for taking out time for us. That was a Global Voice which invests in India quite regularly.